Hello and welcome back, everybody. I hope everyone had a good coffee break and did a bit of networking, visited the expo booths, and voted in our poll, which is closing at midday, 20 minutes left. The next session is called the Open Banking Lending Revolution. And I think the word revolution has probably never been more apt. During the break, I just had a flick back at our program from the 2019 AltFi London Summit. There was actually only one session which featured open banking, whereas today, as you've already heard, and from yesterday, open banking is the theme which is coming up time and time again across all our speakers, all our panels, and all our sessions. At the London Summit 2019, we heard from Christoph from iWalker, who was really, 20 months ago, talking about the ideas that they were having around bundling this technology and how it's helping them to make lending decisions. And it's amazing 20 months later to see how this technology has played out. And we're going to hear from three brilliant panelists today on how they're using this technology, how it's coming into play. So it's my pleasure to welcome, first of all, Dan Hegarty, the CEO and founder of Hibito, who joins us this morning. Hi, Dan. How's it going?
Very well. How are you doing?
Very good, thank you. We've also got Rahul, who's the credit director at digital challenger Cash Plus. Hi, Rahul. How's it going?
Hi, I'm good. Thanks. How are you?
Lovely. Very good. Thank you. And lastly, we've got Rob Hasington, director of head of digital propositions at Experian. Hi, Rob. How are you?
I'm very well, thanks, Ollie.
Excellent. Now, as I said, there has been a bit of a revolution taking place, and open banking as a technology has really pushed forward in the last 20 months, and it's increasingly being used in lending decisions. And first of all, I'd like to go around each of you. Dan, I'm going to start with you, and just ask how you're currently using, or if you're currently using open banking in your processes and in your lending decisions. So Dan, first of all, over to you.
Sure. So I don't want to start by pouring cold water on your enthusiasm for open banking, but sadly we are not using it quite as much as we would like, to be frank. And there's a few quite boring reasons that we can go into later, perhaps. But in general, because we are in the mortgage business and therefore require quite precise kind of disaggregation of income, a single kind of you made this much in a given month isn't quite good enough to serve the purposes of making an application to a mortgage lender. So there's still a way to go there. One thing we have been doing already, though, certainly sort of given the challenges that the self-employed have been facing since COVID-19 kicked in, is offering we've been doing a pilot with HSBC to allow self-employed customers to share their business banking data with us, so we can then in turn share it with mortgage lenders. And that's been quite successful, but very early days.
Interesting. I'm going to ask you more about that in a minute, but Rahul, over to yourself at Cash Plus. How are you guys currently using open banking in your processes?
I think there are more than one interaction where I think open banking actually helps. Of course, it's across the life cycle, right? But more importantly, where I think the biggest potential open banking has is in understanding the affordability of the customer. Now, we think that understanding the actual cash flow of the customer was always challenging. I mean, especially if you want to kind of accurately identify that. So that's always difficult. But then the transaction data which comes from someone's bank account really bridges that gap for us, and we can create a personalized INE assessment. And we know INE assessment kind of gets used pretty much everywhere, whether it is at the initial outset where it's required for making the approved decline decisions, right, which help in meeting our responsible lending obligations. But at the same time, much later in the stage, for example, with delinquent customers, to arrive at a payment plan which is more affordable and therefore more likely to be sustainable. I think that's where it's kind of played its importance quite a bit, especially so in the current environment, in COVID, where we think affordability assessment is key, especially with a lot of people actually kind of experiencing income shocks, either just because of unemployment or reduced hours, and people requesting for payment holidays at the same time. So quite a wide use case from an open banking perspective. from specifically for affordability.
Excellent. Rahul, I'm definitely going to come back to you on that question of affordability in a little bit. But lastly, Rob, Experian's been doing some great work enabling companies to use open banking. Can you talk a bit about how Experian is bringing in open banking?
Sure. Yeah. I mean, you're right, Ollie. We were there pretty much on the outset, so we've been quite instrumental in terms of incorporating the best of open banking into our existing bureau capabilities to give organizations the options to choose how they deploy bureau and or open banking data. So the areas that we focused on is around aggregation, combining information from several bank accounts into a single customer view of that customer's current account coverage, and then surfacing that in a journey to help people manage their money. And then to pick up on Rael's point, it's very much focused around affordability, but across the credit life cycle. So we're using it to do what we call advanced eligibility, to incorporate open banking data with your credit score to understand which products you qualify for, almost in a pre-qualification exercise before you then enter into a full application to find out the best products that could suit your financial requirements. Then, as Rael says, we're looking at in terms of affordability at the point of application across a variety of different credit lines. And then we go into kind of customer management and collections, particularly around debt advice and information around forbearance to actually help a lender understand your current financial circumstances and your ability to be able to pay off the debt. We've been applying that both in terms of consumers, but also looking at business banking information and applying it into a CE journey as well, specifically around helping lenders understand a small business's eligibility for a loan. And in the current COVID crisis, that's clearly proved quite significant. Just a couple of stats that I'll share with you, though. So in our dialogue with lenders, what we've seen is around 62% of that actually saying on the back of COVID, they've tightened their lending policies. And they've expressed a need for greater granularity of data, which open banking can help them with to understand customers' financial circumstances. And around 98% of those lenders believe that emergency payment holidays can have a serious impact on people's ability to be able to afford a credit going forward. And therefore, they're looking at open banking as a way to understand more about the dynamics of consumers and if they've suffered an impact in terms of their finances, which Eurodata might not necessarily serve.
Interesting. Well, some of those topics I think we are going to touch on again. But Dan, I think it's really good we've got sort of a difference of panelists, and obviously the mortgage industry is at a very different stage in this development. But as you hear what Rahul and Rob are saying, do you think it's just a case of time, and in time that industry will catch up with what we're seeing maybe in the SME space, in the consumer lending area?
So I think there are a few different parts to it, right? So I think from the consumer perspective, there's already benefits to open banking in mortgage applications. So for the sort of breakdown of affordability and classification of where you're spending money, that's helpful rather than sort of totting it up yourself. If you can have that automatically filled in for you, that's positive. I think obviously from the lender perspective and the broker perspective, we have, there's serious concerns around first-party fraud, around third-party fraud in the sort of submission of bank statements. So getting it from a kind of trusted digital source is a win for everybody involved. I think the two primary challenges that we face at this point are, one, as I mentioned, because mortgage affordability is quite a precise art, and we have to segregate out, basic income from commission, from bonus, from overtime. Obviously, that isn't going to be a possibility without a payslip. So we're still sort of in the universe of some either sort of PDF or paper document being submitted, and open banking is not going to solve that for us. And then on the other side, it's interesting to see there's a very varied acceptance on the lender side of these different instruments. And we should remember, we're in the mortgage industry, so there are still a couple of lenders insisting on faxed documents. So the continuum is pretty broad. And that is absolutely not the truth of the main retail banks, who are pretty advanced nowadays. But even with their own open banking products, they are sometimes struggling from an operational perspective to accept data that isn't in the form of a bank statement that they can print out and look at. The only other thing I would say, which I think could be as we sort of think about open finance more generally, I think one of the problems is obviously we can't see your mortgage through the open banking data. We can only see the payment. And as we think about monitoring people for remortgaging or ensuring they don't slip onto standard variable rates or any of the other sort of negative outcomes that can come from a mortgage, I think the advent of open finance and the inclusion of mortgage data into that will be a real boon for consumers and lenders alike.
Interesting. Thanks, Dan. Rahul, over to yourself. Now, you mentioned affordability earlier, and obviously 2020 has been quite a unique 9 months in terms of SMEs and the customers you're serving. Can you tell us a bit more about how open banking is helping you to better understand the customers you have and the changes they're going through? And I guess in relation to a pre-open banking time, that additional visibility and how that's helping you make decisions.
I think, let me actually kind of come to the first step of saying, what if there was no open banking, especially from an unsecured lending space? Now, unlike mortgages, unsecured lending, especially in the UK, has never requested for bank statements. I mean, we've never used bank data, right? It's traditionally based on what is there in the bureau, what can I actually get from other sources, and then combining those sources to make a much more logical conclusion around it, and then use that data or use that assessment in all the decisions, whether it is affordability or credit risk generally, or any other touch point really. One is the phase of open banking itself, saying that gives unsecured lenders like us more data to work with, right? And from a credit manager's view, more data is always good as long as it's used the right way, I think. You start getting that data, and then you're able to get a more accurate, or rather I should say a 360-degree assessment of the customer, how they're using their money, not generally from a credit angle, but from a spending perspective as well. Whether they are cautious about their spending, whether they are, what is the money, let's say, left in their bank account on day 5 after their salary hits the account, and so on and so forth. So it gives a lot of insight in their general behavior outside of the general credit aspect, right? So I think that's additional data which is always helpful, and that helps establish what kind of behavior the customer really carries. Now, as I said, so that's already an uplift from the traditional techniques we have been using. Now, if you come to COVID, right, suddenly it becomes more real time. Now, what you would have waited from the bureau to come. So, for example, some lag out there, which is always there. At least with the lag data coming in, and then you realize actually there's something else which has been taken now, so I need to figure that out and incorporate that. Versus someone with open banking access gives you more real-time access, right? So that's definitely there, right, in terms of understanding what there is. Now, I think it also adds value in the sense of not just looking at data, but why the customer is doing a certain thing. So, one example is, let's say from a bureau data, you'll see the customer is on a mortgage holiday. Sure, I mean, that's a sign. But, I have seen a lot of customers during this pandemic who've used this opportunity to actually, pay down quite a bit, right? So they've suddenly become financially savvy. They're already financially savvy, but they're using this opportunity to pay it down completely. So getting to know a customer who's taken a holiday to actually pay down quickly versus someone who's in need of it, I think that's a lot of distinction, right? So that kind of uplift we are seeing, as I said, from traditional to open banking, and then from open banking to real time during the COVID pandemic. I think it's added a lot of value across the process.
Interesting. And over to Rob. Rahul mentioned obviously credit bureaus and the data that's being provided. Now, the additional data of open banking, the question that I'm going to ask is this data a replacement or an addition to the existing data? I think, Rahul, you've kind of answered the question for yourself quite well. Rob, from Experian's point of view, how does the data work with relation to your existing credit bureau data?
So that's a good question, Ollie, and I think it's an important one because there are some fundamental differences between bureau data and effectively the data that's surfaced by open banking. So it ostensibly gives you an understanding of credit risk. It's a record of your credit behavior. and it focuses around your credit payments clearly. As part of Bureau data, though, we've been working with banks for, goodness knows, 10 years now to also collect summarized current account information. And that's where we're getting some additional insight now, because that data is being updated more frequently by lenders on the back of COVID. So we're seeing things like income shock coming through and payment holiday as part of an exercise, which is informing us around kind of changes in the customer circumstances. Open banking data fundamentally is a record of your income and expenditure, and therefore your affordability. So that's a different thing. So we very much see Bureau and the core information on your credit behaviour being complemented by the income and expenditure data that we see in open banking. So they're two different data sources covering two different things. Bureau data ostensibly looks at your credit behaviour. Open banking data looks at your income and expenditure and your affordability risk. To pick up on Dan's point, because I do have some sympathy with him, and I think this is about interoperability of data across different actors in the market is important. We come across exactly the same problem in the mortgage market when we're talking to brokers and to lenders around this certainty around the data that's surfaced through open banking and getting confidence around it. If I share my information with a broker, can that be passed on to a lender, and does the lender have confidence in the accuracy and the provenance of that data? And that seems to be a fundamental sticking point at the moment in the mortgage journey, which is a shame, because if you think about in the context of a customer outcome, if you could have a straight-through process that says I can share my data once with my broker, that gets packaged up, it gets passed on to the lender accepts the provenance of that data, and then can take them through an application queue. That would create a much smoother and a more pleasant digital experience for a consumer, and actually would take a lot of cost out of approving a mortgage. And I think that's the area that needs to be focused on at the moment. We've been doing some work with both brokers and lenders to get some confidence around what we call an open banking statement, which is an equivalent to a bank statement, to enable that interoperability in the data across different actors in the market. But it's a really important point, and I accept what Dan's saying. At the moment, there seems to be that uncertainty and confidence around accepting the data as it comes from one source and then passing on to another to help a customer's experience.
Fantastic. Now we are getting lots of questions from the audience through, we've had some great questions all week so far, so I want to make sure I get to them. But before I do, Dan and Rahul, a question for both of you. And Dan, I'm going to start with you. There's a question around privacy and the data sort of implications of customers needing to share more of their financial data, to put that into the mix to make things work. Now, Dan, you are sort of consumer facing. Rahul, you're facing SMEs. And I know, Dan, open banking, not yet a big thing, but I'd love to get your views on it. This only really works if the borrowers are on board. What's your take on that what Rob was outlining, having more data being shared into the process? Do you think consumers are up for that in the mortgage space?
Yeah, I think it remains to be seen on a number of fronts, and sort of slightly disappointingly in some ways. I think the main problem that is faced right now is not even one of trust, but actually one of user experience, because you don't really apply for many mortgages via a mobile, and the sort of open banking experience is pretty great via a mobile. Via desktop, it's a bit of a mess, and so we just, in terms of like it looking trustworthy and valid and not being sort of high friction, I think there's some challenges there. I think, to put it in the broader context, I think 1 in 5 UK consumers self-identify as financially illiterate. 50% of consumers that we survey tell us that they think that remortgaging is a negative event. So I think it's very easy, I guess, in our sort of our banking and tech bubble to assume like high levels of comprehension. But I think that there's a large part of the sort of the population of the UK that is not even considering these things, and is effectively operating at an enormous disadvantage by not being able to share this data, and consequently not being able to be advised properly, not being able to have sort of information reflected back. And also, I think really excitingly, not sort of benefiting from the sort of continuous analysis of this data, which is where I think it becomes really interesting, rather than just, the kind of precise point in time kind of credit adjudication when you're applying for a loan or a credit card, but rather like preventative tools. They're like, hey, listen, you're trending towards your overdraft or some other sort of negative outcome. Why don't we try and take some corrective action before there's already a problem? So I think for me, like the benefits to consumers massively outweigh the privacy concerns, but we must take it very seriously. And I think and that's about how we communicate it, how we lay out the risks, but hopefully not to the point where consumers are too frightened to use the tools.
They've got to see the benefits before, kind of almost before they actually get involved in it. Rahul, the SME, obviously, the small business community is a different beast. When it comes to sharing their business finances, they're more used to doing that, I guess, from an accounting point of view. Tell us a bit about what you're seeing.
So I think I'll probably kind of start with what Daniel said a bit earlier, which is the benefits outweigh the whole process, right, significantly, right? I think that's the underlying statement here, because eventually with the use of this data, there's always reduction in type 1, type 2 errors, and then eventually kind of getting better customer outcomes. I think that's how I look at it. Now, with that in mind, right, I think it is necessary that the customers understand that benefit as well. I mean, it's very easy for us to sit here and say, for us, the benefit is clear, right? But then do all customers really understand that benefit? And that is where, it is our responsibility that we kind of clearly signpost, clearly explain, what that benefit is. So at least, they know what is it that they're going to get in return for sharing more information. But then also at the same point in time saying, if you share this information, then as lenders, we need to be kind of fully clear and transparent about how we are going to use that information, whether we are going to store it, how we are going to process it, how long do we intend to use it, are there any alternatives to it? So, that has to be clearly laid out to them, right? Saying, this is what it is, this is what we are going to do with it, and this is the benefit, really what you're going to get with it. And then, we see that customers are actually more inclined to go through that journey than averse to it. So as long as they understand it, have the choice to do it, then I think that's where a win-win situation is for both the customers and the organizations.
Fantastic. I've got some questions from the audience, and the first one, Rob, is for you. There's been a lot of excitement and interest this week in the Experian Boost product, which was unveiled, which is going to take into account things like people's Netflix subscriptions with regards to their credit scores. Jason Peters in the audience has asked, this sounds fantastic. How will you drive consumer take-up? And I guess what he's kind of asking is kind of an open banking question there, really, because people need to be open to sharing more data in order to improve their credit scores.
Yeah, and 1 or 2 points around that. So firstly, we're only boosting kind of people's negative credit scores, pardon the phrase. So we're only using it in a positive way. That's the first point. And obviously what we do is we have a relationship with several million UK consumers already. And we're giving them the opportunity to take their data with their consent, show them how their score could be boosted with that information, and then giving them a choice in terms of how they can choose to use that data, and if they want to share it, say, for example, with a lender to actually enable them to understand their ability to afford credit. The service has been operational in the States now for over a year, and we have several million consumers there who have shared data through that journey. So we've been using our existing relationship with consumers on their credit scores to help introduce them to the principles of open banking and how it can be used in an advantageous way to help them get better access to services. So I think we'll be pushing quite hard, or marketing that quite hard to our existing credit expert audience to enable them to share their data and see the benefits of that, and look at how it helps them get access to better services. That's the principle behind it. And that's a principle which we've established as a consumer appetite on the basis of last.
Oh, Rob, sorry, I think we lost you just a little bit at the end there.
18 months of work in the US.
bit of signal difficulties there. But I think we got the picture, which is it's being done in a very transparent and open way. Hopefully Rob's signal will recover.
Is going to be quite
tricky.
We'll persevere. I think the point Rob was making was really good, which is this boost product they're bringing forward is quite transparent. It's only being used in a positive upside way, which kind of sounds like a really good formula for how open banking might also be rolled out and used in these decisions. As Rahul was saying, clarity, making sure things are clear, and the consumer is in total understanding of how their data is being used at all times. We've got some other questions. Let me just jump over. So my colleague Dan Lanyon in the audience has asked, will large banks embrace open banking powered lending at the same tempo as fintech challengers? Rahul, you are our fintech challenger. So Dan, you'll have to answer for the incumbent banks, I'm afraid.
I think it's probably a resounding no, and I think it's already been sort of demonstrated over the last couple of years. However, all I would say is like the cost sort of structures around like the manual parts of underwriting are astronomical, and banks have never been under more pressure in terms of their kind of operational margin than they are now in the midst of COVID. So I think it'll be quicker than it would have been and still be slower than fintech.
And Rahul, from the fintech challenger point of view, obviously you're pushing ahead with this technology. Cash Plus, I believe, in the process of applying for a banking license as well, which will not only make you an SME lender, but an SME bank. Yes. That's embracing this technology. Can you talk about that?
Of course, we're really excited about it, right? Kind of having the banking license just there. So hopefully, we'll be kind of be a bank pretty soon. And I think with the bank license in place, of course, our goals, right, our aspirations, right, with the use of this technology, right, especially around open banking, would be hugely beneficial, right? So I think our adoption, or generally in the fintech space, right, the adoption of open banking is, of course, to find alternative data sources, right, quickly, to bring in more inclusivity, I would say, to the broader population. I think that's probably driving the kind of acceptance of open banking within the fintech world.
Excellent. Rob, I'm glad to see we've got you back. But I think everyone was really enjoying your description of Boost and the messages you were coming out there. Do you have any other points to say on that? A few people are asking about subscription payments, and whether someone has asked whether their Amazon Prime subscription will also be included in Boost.
Yeah, there's a limited amount of data which goes into it, and it's all obviously about understanding where you've got regular payments, how good you are making those regular payments, and part of that obviously will be what's the level of commitment in terms of that regular payment. So there'll be a variety of different criteria that will go into it. It's not everything on your bank statement, let's be clear about that as well. But yeah, the essence of it is there to actually help you understand how your income and expenditure behavior can support your understanding of your financial well-being, and use that to boost your credit score, and, as I say, get better access to services, as it were. So that's the principle behind it, certainly. And as I say, there's a track record of using that in the States, where several million consumers have already shared their data, and it's proved quite beneficial. And it might be just that you're not very good at managing your credit file, but actually, when you look at your income and expenditure, you've got a healthy balance each month, and it's and you can actually afford access to credit. That's the principle behind it, I think.
Fantastic. Rob, Dan, Rahul, thank you all for your time in this session. We've covered a lot of ground, a lot of questions, but I'm afraid we are out of time. So thank you all very much. Enjoy the rest of your days. And next up, we're going to be switching focus. We're going to be talking about alternative credit, and we're going to be hearing from some investors. And my colleague Dan will be back on stage in just a minute to introduce that.